From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Kaylee Lyons. Fed Chair Jerome Powell warns President Trump's tariffs are moving the U.S. away from its goals on employment and inflation, adding fuel to a sell-off that was already underway, in part due to new China chip export restrictions on Nvidia. This as Trump and his Treasury and Commerce secretaries begin trade negotiations with Japan, and China looks for the administration to take certain steps before talks can begin with Beijing. We'll have more with former U.S. Trade Representative Kirk this hour. Plus, we'll bring you part of Bloomberg's conversation with Republican Senator David McCormick of Pennsylvania on tax policy, and our political panel joins on the latest in the escalating legal battle over a man mistakenly deported to El Salvador. Thanks for joining us on this Wednesday. We begin, as usual these days, with the latest on trade and ongoing trade negotiations, which began today between the U.S. and Japan. President Trump announcing on Truth Social this morning, quote, Japan is coming in today to negotiate tariffs, the cost of military support, and trade fairness. I will attend the meeting along with Treasury and Commerce secretaries. Hopefully something can be worked out, which is great for Japan and the USA. Joining me now with more is Bloomberg's Saleha Mohsin. So, Saleha, obviously, it's not just tariffs on the table, according to the president. And our reporting indicates, in addition to making specific requests of Japan when it comes to its policies in engaging with the U.S., China may be part of these conversations, too.
Yeah, Kaylee, we've been hearing this for a couple of days, particularly since Treasury Secretary Scott Bessent entered the fray on these negotiations and is so far leading them. He has been signaling and now received an even stronger, clear signal from the president that China is a factor when any country is negotiating tariffs with Donald Trump. They need to consider what they are willing to do on China's economy to side with the U.S. And we heard that from Secretary Bessent when he said that we will look at negotiating one-on-one trade deals and then work as a group to approach China.
It's fascinating considering that also this administration is still pushing for talks with China in and of itself. Trump wants Beijing to pick up the phone, but our reporting today also indicates that China has certain, if not preconditions, things it would like to see before it's willing to engage with the administration.
Absolutely, Kaylee. We heard from our reporting out of China that they want a clear sense of who is negotiating from the U.S., not the president, but someone who is reporting to the president, who can speak for the president, being directed by the president. So they want an orderly process, the kind that they're used to from the U.S. They also want to know that cabinet officers will not be using disparaging remarks toward China. Trump does not always use them, but he does not seem to bat an eye when you see Bessent or Lutnick or others making these comments. It's interesting, though, because other countries that are smaller, right? U.S., China, the two largest economies in the world, other countries have had to be on the back foot a little bit. Yes, there's some strong words, but they are more willing to negotiate. China immediately retaliated and now is basically saying, here's our laundry list before we even come to the negotiating table.
Yeah. All right. Bloomberg's Saleha Mohsin, thank you so much. Now, tariffs were a big and, frankly, unavoidable topic of discussion as Fed Chair Jerome Powell spoke at the Economic Club of Chicago today. This is what he had to say about their potential impact.
Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Avoiding that outcome will depend on the size of the effects, on how long it takes for them to pass through fully to prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored.
For more, we turn to Bloomberg's Mike McKee, who's joining us live from Chicago. And obviously, Mike, we heard the chairman expand upon this in the moderated part of this session, in which he talked about threats to kind of both sides of the dual mandate.
Well, there are threats to both sides of the dual mandate, and he talked about the dilemma the Fed might find itself in, but he did focus on inflation. Didn't really say anything new, but sort of reminded Wall Street of everything that they're afraid of. The fact that inflation is going to be higher than the Fed anticipated because the tariffs are higher than anticipated suggests that maybe the Fed might have to raise interest rates. A market has been counting on the fact that the Fed would be cutting interest rates. Now, they could do that if unemployment rises a lot and suggests the economy is falling, but maybe you get both things at once. And Powell said this stagflationary situation would be a very difficult one for the Fed. They'd have to figure out which one of those things to attack first.
Well, it was also a funny moment, although not necessarily for financial markets, Mike, when he was asked about a potential Fed put, the idea that the Fed is going to step in at some point if things get too volatile. His short answer was no, but explain his longer answer.
Well, his longer answer was basically that the Fed is not in the business of rescuing people from losing money. They're in the business of keeping the markets going, and the markets are trading well at this point. He did say it's really hard to figure out why the bond market does what it does, so he wasn't going to make a guess on that. He did note that we saw yields rise when they theoretically should have been falling, but that's something that they can live with, especially since they've come back down now.
All right, Bloomberg's Mike McKee live in Chicago. Thank you so much. Now, we did see yields fall today, and equities fell as well, as Powell's remarks added additional downward pressure to stocks that were already under pressure as Nvidia and other tech names dropped on news around China chip export restrictions. Bloomberg's Romaine Bostick has more from World Headquarters in New York. Romaine, we ended off the lows of the session, but still a lot of red on the screen today.
Yeah, it was really a 1-2 punch. Frankly, kind of a 1-2-3 punch. I mean, we started off late last night when Nvidia came out and basically said it was going to have to write down more than $5 billion worth of some of its chips, primarily because of what now appears to be export controls on sort of their second-tier chips, those H20 chips, something that a lot of investors thought they had an exemption on. That was the biggest drag on the market. You pick an index that Nvidia is part of, and it was a big part of the reason why that index was down. And then the WTO came out earlier this morning and said merchandise trade volumes this year, that's actually going to be in contraction, and that's a huge shift from the outlook that they had given just a few weeks ago when they said that we would see growth of 2.5%. And then, as Mike McKee was just talking about, midday, we got those comments out of Jay Powell that, you know, he did exactly what Jay Powell says. We're going to sit here and wait. So if you were looking for some sort of salve out of the Fed, you're not necessarily going to get it, at least not based on what he said today. And that was a big reason why you saw stocks move lower. We didn't have the same superlatives, Kaylee, like we had last week. But nevertheless, a 2% drop on the S&P 500, 3% drop on the NASDAQ, certainly significant. And that's a setup into tomorrow where we start to get a huge slew of earnings that are really going to be a nice cross-section of the economy. It's names like D.R. Horton, the housing company, United Health, healthcare, Las Vegas Sands, discretionary spending, Key Corp, regional banks, American Express, of course, credit cards, and then Netflix. Kelly Lines, I don't know if you're still leeching off your parents' Netflix subscription here, but there's been a lot of talk that of all those names on the screen, that one might actually end up being the most resilient.
And now they've got me on the account sharing thing long ago. Bloomberg's Romaine Bostick, thank you so much. Now, coming up, we'll look at the latest from today's trade negotiations between the U.S. and Japan with Ron Kirk, former U.S. trade representative in the Obama administration. That's next on Balance of Power on Bloomberg TV and radio.
Tariffs are such a club that really don't do anything other than offend those with whom we need to work together, both economically and in security matters. And what we're missing is a good dose of diplomacy.
That was Carla Hills, former U.S. trade representative during the George H.W. Bush administration, last night here on Balance of Power, discussing President Trump's trade negotiation strategy. And joining me now for more here on Bloomberg TV and radio this evening is another former U.S. trade representative, Ron Kirk, who held the role in the Obama administration. Ambassador Kirk, thank you for the time. I'll ask you the same question I asked Ambassador Hills last night, which is knowing that they're working within a 90-day window, talking about negotiating trade deals, bespoke trade deals, to use their words, with dozens of trading partners, having been at some of these kinds of tables before yourself. How realistic do you think the time frame they're working in actually is to achieving their goals?
It is an opportunity for us to step back from the breach. And when we're talking about this 90-day reprieve, it's important to note we're talking about essentially those other countries other than China. Now, having been at the negotiating table, that is virtually impossible to get that done with 15, 16 different partners. But more importantly, the allure of these negotiations perhaps gives the administration the cover that they need to take a step back and right a wrong that they singularly created. And if the negotiations do nothing else but give them an exit ramp to a more thoughtful policy, a more reasonable approach, then that is something we should try to feed into.
But would taking an exit ramp, Ambassador, make this administration lose credibility on the issue of trade when it comes to these partners? I just wonder if they have the space to do that, if they still want to retain leverage in these conversations.
Well, the one thing you have to admire about this president, he will declare victory for anything. And once he decides, so they've all come crawling back and they beg me. I think at this point, America's farmers, America's consumers, America's small businesses who are caught up in this mess, frankly, don't care what the environment has to be. We just need relief for this, because at the end of the day, it is American businesses, consumers, families, manufacturers that are paying the burden of this senseless trade war.
Well, of course, the president argues that he's trying to protect those very same people with these policies who he thinks have been beholden to unfair trade practices and getting ripped off by other countries like China for some time now. And I wonder, Ambassador, and you kind of alluded to this in your first answer, this notion that China is kind of separate to all of these other conversations. If you think it is a realistic proposition for the U.S. to get other countries it's negotiating with to band together with the U.S. in order to combat China, because our reporting indicates that's one of the objectives of the administration here.
Well, that should have been the objective all along, and it has been part of our traditional approach to how we've contained and dealt with China. We've done it in concert with our longstanding allies and trade partners, from Mexico and Canada to Europe, and our partners in other parts of Asia. But because this administration has been so heavy-handed and almost singularly done everything they can to destroy those partnerships, you know, it's hard to kind of bludgeon somebody and then say, well, let me help you up off the ground. Now we're going to go fight the big bully. And that's what's giving so many of us concern, is not only the senselessness and the arbitrariness of these tariffs, it's the destruction that it is doing to many of our long-term relationships. And not just in trade, but in NATO, in security, and in every other venue. For the first time, most of the world questions whether or not they can take the United States of America at our word.
So is there just a great chance then that other countries get together with China and start resisting the policies of the U.S. than that it works the opposite way that the administration might intend it to?
That, you know, that is a challenge, Kayleigh, but the reality is one of the greatest harms this administration is doing is to the reality the world wants to do business with America. Made in America is still one of the most treasured brands in the world, not only because of our ingenuity, the advancement of our products, but because of the rule of law. And other countries would much rather have access to our enormous market, but also because of our principles, than be forced to deal with China. But if we leave them in a corner, we shove them all aside, then they are going to have to rethink that proposition.
Well, and of course, there's also the consideration of not just the tariffs that are being placed on individual countries or this global baseline, but sectoral tariffs as well. We have seen just in the last 2 days, Ambassador, the formal opening of Section 232 investigations into things like semiconductors, now critical minerals. And I wonder what you make of those kind of efforts that are supposed to be looking specifically at national security, and if you think those actually may have more merit.
Well, I don't know that they'll have more merit, because the one thing, Kayleigh, that makes this so troubling, all these tariffs are piled on top of previous tariffs. The administration imposed steel and aluminum tariffs, the first Trump administration, the 10% baseline there, the 20% levy is there. And at a time that you're trying to encourage manufacturing to come back to America, and particularly in the chip sector, is this the time to spark a trade war with the one country that many of these companies are dependent on for the raw materials. So that's a decision the administration has to make. But I think there has to be a step back and look realistically at how do we continue to grow our economy? How do we have access to the inputs that we need to be able to do that? And what's the most thoughtful way to go for it? And let me just add one other thing, because lost in this is the notion that all inputs are bad. And the reality, whether it's agriculture or manufacturing, much of what we make in this country, we need to source materials from other countries. So imposing a tax on that only makes the cost of producing those goods more difficult.
And what about the legal justifications you use to impose that tax, Ambassador? I mentioned the Section 232 reviews would be a different kind of tariff authority the president is using, but we've also seen him use IEEPA, declaring an economic emergency to enact tariffs on trading partners. Gavin Newsom of California is now suing, saying that's a misuse of that authority. And I wonder if you do think that legal standing is murky.
Well, it has never been used before, and one of the frustrations that you're hearing from American businesses almost across the board, particularly our exporters, is that IEEPA, the Emergency Economic Powers Act, has never been used before to levy tariffs. It's traditionally used to levy sanctions, and there are a number of legal challenges, not just from the state of California, but other businesses challenging this statute in particular, because of the fact that on one hand, the statute makes it clear if the national emergency is, say, fentanyl in this case, the remedy should be related to that. And traditionally, tariffs haven't been used for that. The other frustration is there are no recourse available for our businesses under IEEPA as there is under Section 232 or under Section 301.
And finally, Ambassador, as we look ahead to what's happening tomorrow, a visit from the Italian Prime Minister Giorgia Meloni to the White House to discuss trade with President Trump. From what you've seen, how steep of an uphill climb is it for the European Union to reach some kind of accord with the U.S., knowing the administration has said it's not just about tariffs, but what they describe as a big basket of non-tariff barriers?
You know, I'm having as much difficulty as a lot of people trying to divine what this administration's goal is and what will make it happy. Sadly, one thing we know is this president loves to have everyone come and at least presumptively bend the knee, pay homage to him. And if you do that, then you get maybe a little better deal than you might not otherwise. But the European Union is our strongest economic partnership outside of a trade relationship, and has been for years. And so I'm hopeful that the Italian Prime Minister, the heads of the European Union, and others can convey that need for that partnership to President Trump about how we can work together and collectively grow our economies and come up with a more thoughtful approach to how we want to deal with China.
All right, Ron Kirk, former U.S. Trade Representative during the Obama administration, thank you so much for joining. And still ahead, Republican lawmakers are considering crafting a new tax bracket for the wealthiest Americans. But Senator David McCormick of Pennsylvania says that won't fly. We'll bring you some of Bloomberg's interview with him next on Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. I'm Kaylee Lines. Earlier today, Bloomberg Wall Street Week host David Westin sat down with Republican Senator David McCormick of Pennsylvania. They discussed the Trump administration's standoff with Harvard University and whether some Republicans are starting to warm to the idea of a tax increase on top earners. Here's part of their conversation.
We hear reports that, in fact, Republicans, such as you, are actually open to increasing the top bracket. Do you think that that's likely to happen?
I don't think that's likely to happen. No, I think that it's very important that we extend the tax cuts from 2017. Now, the things I have said on the campaign trail, I also like some very specific tax policy that will help people that are across Pennsylvania struggling to make ends meet. And so child care tax credit, the child tax credit, an IVF tax credit, things that if you're living, the median income in Pennsylvania is $52,000 a year. If you're a family of four making $50,000 or $60,000, $70,000 a year, you need help to be able to have children and have a family. And so some of those targeted tax policies, in addition to the extension of the tax cuts, I think are worthy of consideration.
You mentioned that the government, Donald Trump, has promised really historic deregulation. But right now we have this dispute with Harvard. And I've read the letter, you've read the letter. That doesn't look like deregulation to me. It looks like a really vicious sort of regulation and against all higher education. Is that consistent with the Trump theory of deregulation?
Let's start with, I mean, this is something I talked a lot about in the campaign. We had challenges at Penn. We have challenges across our universities. But let's start with three things that I think most people would agree with. Number one, there is anti-Semitism deeply embedded in a number of our most elite universities. We saw that at Harvard. We saw that at Penn. And in many cases, those universities have dealt with that terribly. They haven't enforced the law. They haven't actually they protected Jewish students and other students from being able to go to class. So that's point one. Point two is, I don't think anybody would dispute the fact that particularly the elite universities are highly progressive, highly biased. If you look at the tenured faculty, they're almost exclusively progressive Democrats. I mean, I went to one of those universities for graduate school, Princeton, and the departments are, for the most part, progressive Democrats that are promoting a certain vision. The third thing I would say is a private university can do anything at once, but Harvard is getting $9 billion of taxpayer money. And so there's very little accountability in those universities for actually how that money's spent. So I think what we're having right now, for the first time, at least in my memory, is a real conversation about if the taxpayers are going to give tax exemption to these endowments, are going to give billions of dollars to these universities. What can our expectations be as taxpayers for promoting the public good? And I don't mean a Republican good. I mean the public good, where we're creating universities where people can disagree agreeably, where there's not some sort of political bias, where Jewish students and other students can know that they're not going to be prejudiced or treated to the risk of violence, and that there's an accountability.
That was Republican Senator David McCormick of Pennsylvania with Wall Street Week host David Westin earlier today. And still ahead here on Balance of Power, the governor of California, Gavin Newsom, is suing to halt President Trump's tariffs. IEEPA taking it to the court. We'll dive into that fight with our political panel, who joins me next here live in Washington on Balance of Power on Bloomberg TV and radio.
There has been a track record of a wide variety of chips being used to drive the development and training of what are almost frontier-level open source models by companies within the PRC. And as we think about our protect agenda, it's critical that we develop an export control regime that is simple and clear and is one that we enforce very, very strongly.
Michael John Kratsios, White House Director of the Office of Science and Technology Policy, this morning on Bloomberg Technology discussing chip export controls. After Nvidia revealed yesterday the Trump administration is curbing the sale of its H20 chip in China, a move the company says will cost it $5.5 billion. It led to major sell-off for Nvidia today, but across the chip industry, Nvidia down nearly 7 percentage points. AMD more so than that, and ASML, after a bit of a demand warning, was also down about the same amount. And joining me now for more is Bloomberg's Mike Shepard. And Mike, obviously these companies were already trying to navigate export controls. NVIDIA's way of trying to get around those was the H20 chip, and now here we are.
And now here we are, Kaylee. And there was some speculation as the president took office that perhaps he might revisit some of these restrictions, which have been put in place in increasing measure since October 2022. And this is in response to concerns that China was amassing quantities of these advanced chips that could power both artificial intelligence applications, but also have a military use. But the hope for some in the industry, including from NVIDIA, was that maybe the president, as he took office, would revisit these. However, DeepSeek happened, and we saw that not long after Donald Trump took the oath of of office, we saw this breakthrough in artificial intelligence from this Chinese startup that may have been using, in fact, those H20 chips at issue. And since then, the administration has promised to crack down, Kayleigh, and we're seeing signs of that right now.
Well, and certainly that is had a market impact today, Mike. And I wonder how much of the selling pressure that we saw across technology is also due to demand concerns that arise from not just export control policy, but tariff policy that these companies simultaneously have to navigate.
Well, they are having to navigate this, too, just like every other industry. And the question is whether the tariff regime that the Trump administration is rolling out will have some sort of effect on the economy and on demand from the consumer level to businesses buying machines and equipment, and how that will play out. And then there is also the question of the sector-specific tariffs that the administration has talked about applying to semiconductors and chip-making equipment. And that will raise costs for those chip makers. And it may also increase barriers to entry for companies like ASML, which produce these very sensitive, very hard to produce machines that make some of the most advanced chips out there. They're very expensive, and it becomes this hurdle for them to sell in the U.S. And it was a question that came up on their conference call today as they discussed their results.
All right, Bloomberg's Mike Shepard, thank you so much. Now, California is the home of many of these major tech companies we're talking about, including Nvidia. And on its own, it's the 5th largest economy in the world. And today, it became the first state to sue the Trump administration over its tariff policies. Here's the Democratic governor, Gavin Newsom.
Manufacturing, one side of the border, assembling on the other side of the border. You think about the impacts, the automobile industry, electronics, aerospace, in our state alone, disproportionate impacts. So California, why California? Well, that's why. No state is poised to lose more than the state of California.
Joining me now with their reaction is this evening's political panel. Roger Fisk, former aide to President Obama and Democratic strategist, alongside Republican strategist Emily Domenech, senior vice president at Boundary Stone Partners. Welcome to you both. Emily, essentially what this lawsuit is arguing is that the Trump administration is misusing IEEPA here. 1977 law does grant some economic power in the case of emergencies to the president. Traditionally, it's used for things like sanctions, not for things like tariffs. Is there actually a risk that this can't stand up in a court of law?
I think it's really fascinating to see Gavin Newsom focus on everything except being the governor of California. We hear him now. He's suing the federal government. He's starting a podcast. He's sitting down with Republican strategists all around the country. And we still have a situation where in L.A. we have homelessness. We can't rebuild from wildfires, and we can't get a permit to do anything to prevent those fires in the future. So I think, frankly, we've seen a lot of these cases. This seems to be the new sort of opposition playbook from the Democratic Party to file a lawsuit in as many courts as you possibly can to challenge the president's right to take action in this space. But the president has a long history of being able to enact tariffs, to enact sanctions, and to enact other economic policies from the executive branch. And the Trump administration came out with quite a strong response, dismissing the validity of this case.
But is there no validity to Newsom's argument that as effectively the world's 5th largest economy, California is uniquely vulnerable to something that has an economic impact like tariffs?
I think you can make that argument all you want, but that doesn't mean that you get to take away the power of the presidency and the power of the executive. And at the end of the day, if Gavin Newsom wants to change that policy, he can run for president and win.
Well, there's plenty of talk about that coming in 2028, Roger, as we all know. What do you make of Gavin Newsom as being a foil to President Trump on the issue of tariffs?
It's first off, thank you so much for having me, and it's great to be here with Emily. It's never bad politics to go to the mat for your people. So it won't shock you to hear that I have a little bit of a different take on this than Emily. You know, with an economy of his size, it's important that he go out and pursue this in, I think, legitimate policy and legal arguments. It's not necessarily performative especially when you look at, for example, Senator Van Hollen going down to El Salvador, something that is much more kind of camera friendly. This is Governor Newsom going to the mat for his people and playing this out in, I think, what will end up being President Trump's Achilles heel, which ultimately will be competence in governing, competence in having robust policies that can actually stand scrutiny. And we'll see if it does actually stand that scrutiny. But I think this is consistent with who the governor is and to your coy question, where he possibly might want to go.
Yeah, and obviously that's a conversation we'll probably have more in earnest after we get through the midterms in 2026. To get back, though, to the kind of fundamental root of the question, would it be different if President Trump were using authority like Section 232 investigations that he has opened into specific national security-oriented sectors like critical minerals or semiconductors? Is that a safer legal way for this administration to go about it?
It certainly could be, but I would argue that this is just a difference of policy choices. It's not a question of legality. It's a question of policy. And it's perfectly fine for any governor to come out and say, I have a disagreement in policy with a sitting president, but that doesn't mean that you get to go try to use the court system to stop that president from using that authority. It seems to me very similar to you used a really old law to justify what you're doing. Well, an old law is still a law. And if Congress has an issue with that, then Congress can take actions to limit the power of the executive.
I want to get back to a fight that is happening in court right now, too, when it comes to questions of immigration and deportations. But while we're on the subject of governors, there's been reporting today, Roger, that Elise Stefanik is considering a bid for governor of New York. And I wonder if you see Governor Kathy Hochul as being vulnerable to a challenger like that.
I think we live in an era where every incumbent is vulnerable. I'm assuming that Representative Stefanik probably dropped her lease on her place in Washington, D.C. or something and prefers to maybe just stay up there after the UN didn't work out. I can understand why she would want to go and kind of establish more of her own political sphere of influence instead of being one of hundreds of members of Congress and go up and be the governor of the state. I think it would be a steep climb for her, given how much she's drifted from her kind of centrist brand into being much more of a cultural MAGA warrior. But we'll see. There's pockets of New York, as we've seen in the last few cycles, that are willing to entertain candidates like that. And then the question is, where do those demographic trends kind of go in the next year or two?
For the sake of time, I want to move to the case of Kilmar Abrego Garcia, of course, the man who was residing in Maryland, who was deported, admittedly mistakenly by the administration, to El Salvador, where he remains imprisoned. And Democratic Senator Chris Van Hollen of Maryland actually made tracks to that prison in El Salvador today. This was him as he was departing from Dulles.
My overall purpose here is to send a signal that we are not going to stop fighting for his return until he is actually released. I may be the first senator or first member of Congress to go down to El Salvador, but people are going to keep on coming until he comes home. This is about the rule of law. This is about due process. This is about not letting people be just whisked off the street, which the Trump administration admits was done in error. And I just want people to think about what that means.
We heard from the press secretary, Caroline Leavitt, just within the last hour, suggesting that this was a terrorist, that there was reason why he was sent to El Salvador, that he's being misrepresented in the media. Obviously, a lot of this is focused on the man. But is it the issue around this individual, Roger, or the idea that this administration may be flouting the courts in the first real instance of it in this case?
He might have those weapons of mass destruction, too. I mean, who knows? I mean, the justifications for this are all over the map, which is kind of an indication of when there's not a solid legal foundation. This was a stumble. I think they should just kind of own that. But politically, I would imagine the Trump White House would be perfectly happy for every Democratic U.S. senator to make a march down there. I think to get back to my earlier point about Governor Newsom, I understand Senator Van Hollen in the sense that it's never bad to go to the mat for your people. But what he's telegraphing here is that the Salvadoran immigrant who entered the country illegally is his priority. And you can just see how the Trump administration, in kind of an art of war way, is willing to just cede that real estate so that more and more Democratic senators get involved. They should just let this play out in the courts. Obviously, it's got vigorous traction legally, and let that go the way it should go. But to turn around and try to make it into a camera-ready spectacle, I think is getting out ahead of their skis.
Well, and that was another characterization from Caroline Leavitt. She called this Democrat grandstanding in her remarks earlier. Emily, I wonder what you make of this case, and obviously which has been highly publicized, and whether or not the administration is going to continue quadrupling down, even in the threat of potentially being held in contempt of court.
Yeah, I mean, I think Roger made my point here. I can't imagine being a Maryland citizen and watching my senator spend taxpayer dollars to go advocate for an illegal immigrant who came into this country illegally, so already broke our law, to fight for him to come home when he's an illegal immigrant who shouldn't have been here in the first place. I think the Trump administration, frankly, will absolutely double down on this issue because it's very easy to tell most Americans, do you really think that your elected officials should spend their capital and your tax dollars fighting for someone who came here illegally, who certainly may have been part of a dangerous gang? That's a good position for the Trump administration to be in. And I don't think on a popularity contest, it hurts them in the long run.
All right, Emily Domenech, great to have you. Thank you so much for joining alongside Roger Fisk, our political panel on this Wednesday evening. And still ahead, U.S. stock losses deepened today as Fed Chair Jerome Powell warned that trade tensions could spur inflation. We've heard that before. We'll discuss the sell-off with Nancy Tengler of Laffer Tengler Investments next on Balance of Power on Bloomberg TV and radio.
Markets are struggling with a lot of uncertainty, and that means volatility. But having said that, markets are functioning. Conditional on being in such a challenging situation, markets are doing what they're supposed to do. I think you'll probably see continued volatility, but I wouldn't try to be definitive about exactly what's causing that. I would just say markets are orderly and they're functioning kind of as you would expect them to in this time of high uncertainty.
Fed Chair Jerome Powell earlier today at the Economic Club in Chicago discussing the current market volatility. And for more analysis of that and the sell-off that we experienced today, we turn now to Nancy Tengler, CEO and CIO of Laffer Tengler Investments, who is joining me here on Bloomberg TV and radio. Nancy, that was kind of the elongated answer to the initial question the chairman was asked, which is there a Fed put? His short answer was no, and then he went on to explain. If there's not really a Fed put, it's not clear abundantly whether or not there is a real Trump put. What's to say that there is anything to provide a floor for financial markets here?
Well, thanks for having me, Kaylee. It's good to see you again. I would say this. I want to agree with the chairman because I usually vehemently disagree with him. But markets are orderly, and the bond market is not panicking. So that's the good news. We seem far away from any kind of potential credit crunch, which is really the recession you don't want to have. So that's good news. But this chairman has been late to every party since he's been in office, and he's frequently been wrong. I mean, not even frequently, almost always. So he told us last week that tariffs were transitory, and then now we're learning that they're not. And so the market that is driven by the algorithms and the hedge funds are reading the headlines and then selling off stocks on this news. And I think that's what investors have to get used to. We're not back to the recent lows, and we are, I believe, still in a secular bull market. So you kind of have to take the bad with the good and use this as an opportunity to reposition your portfolio to higher quality names with great management companies and hopefully growing dividends.
And I want to get into where you're looking at doing that. But if we could return to your point, Nancy, about the idea that this Fed has always been late in recent history, knowing that they keep saying they need more certainty when it comes to tariff policy before they're making any decision, that they're okay with kind of waiting and holding for now. Is it possible that no matter when they decide to move, and if it's in response to a greater inflationary threat or a threat to growth and the labor market, that it's going to end up being too late to make a material difference, knowing there's a lag to monetary policy anyway?
Yeah, and I just found a piece I wrote in November. You're absolutely right, by the way, in November of 2022. And what we had was a Fed who kind of acknowledged certain aspects of the mandate and then said, but the labor market's too strong. This is just splitting hairs. What we really need is leadership in Washington, and I don't think we've gotten it there. I think the administration has really stumbled on this policy. It's the worst policy rollout I've ever seen in my 40 plus years. But then with the Fed, you can't wait until everything is known and then act and expect to have a result, because as you point out, monetary policy has a lagged effect. So this notion of driving through the rearview mirror is not helpful to monetary policy. It's not helpful to markets, and mostly it's not helpful to Americans. All that said, Kaylee, in the 90s, we had a Fed funds rate above 5%, and we had inflation above 3, or averaging about 3. So it is possible to get robust stock returns and productivity improvements with higher interest rates and higher inflation. But we need leadership, and we're not seeing it at the Fed. We're not seeing it come out of the Trump administration.
Well, and you need to be positioned strategically as well. So, Nancy, to get back to your point about where exactly you want to be, or where you want to be adding as we're seeing dips like we experienced today, where exactly are those areas for you?
Yeah, so we're sort of barbelling our portfolios. Usually when you get a correction or even a bear market, that's often the time when you want to double down on some of the risk that maybe took you down in the first place. So we've been adding to some of the tech names, and we did it before the tariffs were put on hold. So we're still above the purchase price of those recent purchases. But then we've added some defensive names. So Williams, a natural gas pipeline company, TJ Maxx, which is just raised the dividend 13%. And continues to be the best executing low-price retailer in the country. We also added to Accenture to keep our exposure to technology, but do it in a way that is not chip dependent necessarily. And we added to Microsoft recently. So we've been making those kinds of trades. We shifted our AI bets, if you will, to software about almost 9 months ago. And so we've continued to add to names like Palantir and CrowdStrike, as well as ServiceNow. And we've also added to Nvidia. Now, I'm waiting a little bit here because we need a little bit more clarity. I think this announcement today was disastrous, and not just because it hit Nvidia, but because basically the administration is handing over the AI dominance to Huawei in China by cutting off the shipment of chips.
Well, and as we consider some of these tech names, we're going to start seeing them reporting quarterly earnings in short order. Nvidia has already indicated, obviously, as a result of this news, we're going to see a pretty big charge related to the H20 chip. But what real insight are you expecting we'll be able to glean, Nancy, from not earnings, but forecasts this quarter, given all of the uncertainty we just talked about?
Yeah, I mean, managements obviously, Kaylee, don't have any incentive to provide guidance. I mean, I wouldn't if I was in the C-suite of a major corporation. But that said, we have a few examples. So we saw Johnson & Johnson. They beat on restructuring, but they kind of provided decent guidance. We saw the same thing from the banks. So we're not seeing, I mean, earnings are backward looking as well. So we really do depend on guidance, and particularly revenue guidance in an environment like this. But I think all bets are off. The market is discounting a decline in earnings growth this year already. Many would say it's not enough. I might be on the other side of that trade. That's what makes a market. So we're listening and we're paying attention. Next week, things really ratchet up. And of course, then the week after that.
All right, Nancy Tengler, CEO and CIO of Nancy Tengler Investments, or Laffer Tengler Investments, rather. Thank you so much. I wish we had more time. Now, President Trump just posted on Truth Social, quote, "A great honor to have just met with the Japanese delegation on trade. Big progress." We'll look for more details on what exactly the progress that was made was, and whether there'll be more progress tomorrow when Italy's Prime Minister Giorgia Meloni is set to visit the White House to discuss tariffs. We'll have a little bit of a preview of that meeting next on Balance of Power on Bloomberg TV and radio.
The European Union is our strongest economic partnership outside of a trade relationship, and has been for years. And so I'm hopeful that the Italian Prime Minister, the heads of the European Union, and others can convey that need for that partnership to President Trump about how we can work together and collectively grow our economies and come up with a more thoughtful approach to how we want to deal with China.
That was Ron Kirk, former U.S. trade representative during the Obama administration, earlier this hour on Balance of Power, discussing his expectations for Italy's Prime Minister, Giorgia Meloni's visit to the White House tomorrow. Tariffs, of course, are at the top of the agenda for her conversation with President Trump. Meloni planning to propose a reciprocal elimination of most industrial tariffs between the U.S. and European Union, but expectations for major wins are low. As keep in mind, the EU's trade chief met with the Commerce Secretary Howard Lutnick and U.S. Trade Representative Jamieson Greer on Monday and left with little clarity, according to our reporting, on the administration's aims, as they say both tariff and non-tariff barriers need to be up for negotiation. So we'll, of course, have full coverage of that Meloni-Trump meeting tomorrow here on Balance of Power. In the meantime, check out the Washington Edition newsletter on the Terminal Online, and I'll see you tomorrow on Bloomberg TV and radio.